Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the first video of my series about investing in the world with European UCITS ETFs. And as you can see, the first part is going to handle the all-world UCITS ETFs. So the rules are, I'm going to discuss 32 ETFs and 6 of those ETFs are offered in two different currencies. So that's why I say +6. And they need to invest in companies all over the world. The ETFs, they are based in Europe, so they are all UCITS ETFs. They need to distribute a dividend and they are not synthetically replicated. So those are the rules. You know, I made series about investing like that in Europe, in the USA, and also in the emerging markets. I made, in the beginning of my YouTube channel, a few videos handling world ETFs, but I didn't organize them as nicely as in my previous series for those other regions. So I thought it was a nice idea to make this series towards the end of the year. So when you think about starting investing in 2026, this is a nice list for you in the coming 5 videos where you can have an idea of what is available for investing towards the whole world. If you know of any other European-based ETFs that I missed, please comment down below. With my EU series that I made a couple of months ago, I got some really great additions for my series in 2026. So I want to thank my viewers for that, especially one. You know who you are. And in this series, there will be 5 videos, so I'm kicking it off with the all-world UCITS ETFs, which have developed and also other countries in their index, so also the emerging markets are represented. It's not a large percentage, so if you want to be exposed more towards emerging markets, you should include an emerging market ETF as well in your portfolio. But if you want to keep it simple, one fund portfolio is definitely possible, and I will mention this later as well. The MSCI World Index is going to be the next index that I'm going to handle, so in video 2, and that one has only developed countries represented in it, but it's also worldwide, so no emerging markets, no upcoming markets there, but just the real developed countries. And rest of the videos, they will be more mixed, and yeah, video 3 and 4 will be more oriented towards dividend ETFs, the real dividend ETFs then. These are distributing ETFs, but they don't give such a high yield. So if you want to follow this series, or you want to follow my U portfolio, or my wife's and my ETF portfolio that I am also presenting here on my YouTube channel, please click that subscribe button. Also hit that like button, hit that notification bell if you want to, so that you can follow along for this series and my other things that I'm posting here on my YouTube channel. So the all world, I'm going to present here the FTSE all world index. So the top 10 consists of 4.60% Nvidia, 4.24% of Microsoft, 3.86% Apple, 2.47% of Amazon, 1.82% of Meta Platforms, then 1.54% of Broadcom, then 1.40 and 1.13% in Google, then 1.06 in Tesla, and to top it off, 1.04% in TSMC. So from the get-go, you can see that it's quite USA heavy. So United States are really heavily presented, and you can see that also in the distribution towards the country. So 60.32% is invested in the US, 5.77% is invested in Japan, 3.38% is invested towards the UK, 3.14% towards China, and 2.17% in Germany. If you are from Switzerland, it's 2.01% that is invested in Switzerland for the all world UCITS ETFs. And then you can also look at the distribution of the industries or sectors, and there you have 26.98% in technology, 15.14% in financials, 10.60% in consumer discretionary, 9.73% in industrials, and 8.54% in telecommunication. So the bad thing about these indexes is that if you don't like to have a heavily weighing towards the US, that these ETFs are not really for you, or you should complement them with a European ETF, an emerging market ETF, or a BRIC ETF. So that's completely up to you. But for most of the people, these kind of ETFs will do for maybe a one fund portfolio. So if you want to keep it simple and invest in one ETF, so every month you put money aside, or every week, it's up to you what you want to do. And then you just invest in it, and you invest all over the world. So with one fund. You have to check, of course, the number of companies and their weighing. So what I presented on the previous slide, that's just for the FTSE All World Index. But you should check it for every ETF that I'm presenting here. Also the country and continent distribution and the sector distribution, you should check that out. It's not financial advice that I'm giving here. It's just a listing of all the ETFs that I find, and I want to make it attractive, so I'm not going to bother you with all the distributions of all the funds, because then my video would be 50-60 minutes long, and I've noticed that a lot of people, yeah, they don't want to see that, so I want to go over them more quickly. And if you like it, it is maybe all that you need, and you can start investing in it as you want, and just be consistent, because that is the key. If you want higher yields than what you are going to see today for these ETFs, wait till videos 3 and 4. But just remember, higher yield often implies that you will have a lower growth potential of your ETF. So that's especially true for ETFs from video 4. You will see that for sure. It's going to be a short video, that one, because there aren't that many ETFs that offer a very high yield. So video 4 is for the very high yielding dividend ETFs. So the younger you are, I would advise you to go for ETFs from video 1 or 2 or N2. It's completely up to you. So if you're younger than 40 years, maybe this video and the next one are more to your liking, unless of course you like dividends as much as I do. I started investing into dividends, towards dividends, from the get-go. So I was 14 when I bought my first fund. I was 15 when I bought my first stock. And yeah, okay, my first stock, that was real software, so that wasn't really a dividend ETF, a dividend stock. But then my second one, that was the Sendelo, and that was a really heavy dividend stock. It's still a heavy dividend stock. So yeah, I like dividends, and I would advise my children to start with ETFs from video 3, but whether or not they do it, it's totally up to them as well. So they can watch this video and decide for themselves. They have CHDVD, that's also a really heavy dividend ETF from Switzerland here. And I hope that they will see that that brings a lot of cash flow, and reinvesting those dividends, yeah, that can help you a long way along the line and keeps you motivated as well. So let's get started with the ETFs. The first one, V3 AL or V3AM. From Vanguard, ESG Global All Cap UCITS ETF. You can see the ISIN code EA00BNG8L385 on the slide all the time, so I'm only going to mention it for this ETF, but they are always given from the get-go. And then you also see the total expense ratio. It's 0.24% for this Vanguard ETF. The currency on the 6 is Swiss francs, so you can buy one share for 5.533 Swiss francs, and the dividend that you get distributed is in US dollar. There are 5,724 companies in this ETF, so that's a lot, and you will see that I'm mentioning the ETFs according to their amount of holdings that they have in their ETF. So this one is the highest amount of stocks or shares or companies into the ETF, so 5,724. There is 444 million Swiss francs invested towards the ETFs. And that's also a thing. All the ETFs, the money that is invested toward the ETFs, I'm always going to mention it in Swiss francs. So even when it's here US dollar or whatever, here this number will always be Swiss francs. It is a sampling ETF, so this means it buys the stocks that are in the index to its liking. They want to replicate it as close as possible, but they have a little bit of wiggle room. So they aren't as strict as the fully replicated types, which is actually quite good when you have so many holdings in your ETF. Here you see the performance of the ETF in the past few years. So in the past year, it is up 6.73% in Swiss francs, and it is up 43.51% in Swiss francs for the past 3 years. I'm always going to give Swiss francs, the performance in Swiss francs, the performance in euro, and the performance in US dollar. And as you can see, it fluctuates a lot. So the euro is more or less stable compared to the Swiss francs for the past year, but the US dollar got a lot weaker. So there you see that the performance in US dollar is way higher than for Swiss francs and the euro, and as well that's the case for 3 years performance. So there it is up 81.49% compared to 43.51%. And you see that the euro is always losing a little bit of value compared to the Swiss francs. So it goes more slowly than the US dollar the past few years. And especially in the last year, the US dollar suffered a lot. You get paid quarterly dividends with this ETF, and they are in the most common months, so in March, June, September, and December, and you have a dividend yield of 1.24%. And here you can see the dividend distributions of the past 12 months. So here, this is the distribution from December of last year, and yeah, for this year we don't know yet how much it's going to be, but you get a general idea. It will be perhaps a little bit more, so I think it's going to be 175 or something like that. But I will report that then in my next series when I revisit this series in 2026. Then we can go to VWRL, the Vanguard FTSE All World UCITS ETF. So it has a total expense ratio of 0.19%. So it's down from 0.22%. And maybe you watched my video about Vanguard lowering the total expense ratios for a couple of their funds. So they lowered them for 6 funds. And I thought it was only going to be for the accumulative version of the All World UCITS ETF. But they also did it for the distributing ETF. So there was a mistake maybe on their website because I couldn't find it anywhere. But there wasn't one distributing ETF that got their fees lowered, but also this one. So I'm really happy about that. For a lot of people this means a lot, but they still aren't the cheapest one, because then yeah, you will see it in 2 ETFs further that you have the Invesco one that is still cheaper than this one and follows the same index. So you can buy one share on the 6 for 126.88 Swiss francs, and the dividend is distributed in US dollar. You have 3,595 companies in this ETF, and there is 17 billion invested into this ETF. So it's the largest one by far, and it's a sampling replication type of ETF. You can see the performance. So in the past year, it is up 7.35%. In the past 3 years, it is up 44.21%. And in the past 5 years, it is up 58.05%. And quarterly payments, once again, in the most common months, and you get the dividend yield of 1.37%. And as usual, here you can see the past dividend payments of VWRL. So here in June, it's almost double of the other quarters, but you know the deal there. You have a lot of European companies that pay out their dividend in the second quarter, and that's why there the dividend is higher, of course. Then we can go to the third ETF, WEBG. That's the Amundi Prime All Country World UCITS ETF, and you can see it's still a young one. It started on the 21st of February of 2024. You also have the Swiss francs type 1 available since the 7th of August of 2025. So that one didn't start it for a very long time already. So it's a really young one, the one in Swiss francs. But the US dollar one is around for 1.5 years, more or less now. And you can buy one share for 10.41 Swiss francs on the 6 or for 13.228 US dollar. You get paid out US dollar in dividends, and there are 2,404 companies in this ETF. The total expense ratio, I forgot almost to say that, but the total expense ratio, it's the cheapest one of the bunch. It's 0.07%. So in that regard, Amundi did a great job. And yeah, since it's a young one, you only have the performance of the past year. So in Swiss francs, it is up 7.60%. But then the bad news, although the total expense ratio is really good, you only get paid one dividend per year. At least it is in the beginning of the year. So if you want to let your dividend compound, you just have to reinvest it as quickly as possible in February when the dividend is paid out, and then it can compound for the rest of the year. But you know that I like quarterly dividends more, so in that regard, I'm not that happy with Amundi here, but at least they are putting some pressure on the other ETFs to lower their total expense ratio. And here you have the dividend yield, it's 1.22%, and they paid out $0.162 in February of this year. Then we can go to the FTSE All World UCITS ETF from Invesco, the FTWD, only available outside of the Swiss country, so it's not on the SIX stock exchange. It's available on the Xetra and on the London Stock Exchange, and you can buy one share for 6.657 euros. And it's also a recent one, so the 26th of June in 2023 it started, and you have a total expense ratio of 0.15% compared to the 0.19% of Vanguard. So yeah, for Swiss investors that want to stick to the SIX stock exchange, this one isn't an option. and that's too bad that Invesco isn't bringing it still to the SIX stock exchange. They should do it. They will take a lot of share away from the Vanguard, and then maybe Vanguard will lower their total expense ratio maybe even further. You get paid out dividends in US dollar, and there are 2,388 companies in this ETF. There is only 152 million invested towards this ETF because I think a lot of people don't know that this one exists, and they are just used of putting their money towards the FTSE All World of Vanguard. But with this total expense ratio that is 0.04% lower, they should really consider to just stop putting their money towards the Vanguard one and start putting their money into the Invesco one. It's also sampling time, just like the Vanguard one. So in that regard, everything is more or less the same. And also the performance is more or less the same. So you have a performance of 7.45% in the past year. They also pay in the same months as the Vanguard one, and the dividend yield is 1.38%. So compared to 1.37% of the Vanguard one, there's hardly any difference there. And yeah, they pay out in March, June, September, and then December of 2024, just like the Vanguard one. And also in June, it's more or less double of the other quarters. Then we can go to the PSRW from Invesco, the FTSE RAFI All World 3000 UCITS ETF, and look at that number 3000. You will see what I mean in a few seconds. And RAFI, it means Research Affiliates Fundamental Index. Total expense ratio, it's the most expensive one, 0.39%, and you can buy one share on the SIX stock exchange for 33.32 US dollar. The dividend is also distributed in US dollar, and here you can see why I'm pointing to the 3000. There are only 1179 companies in this ETF, and probably due to the fact that there is only 97 million invested towards this ETF, and if they want to receive more money, they should lower their total expense ratio for sure. And they should do that because in their title it says 3000. And when you have a RAFI index of 1000 or 2000 or 3000, this means that normally you are investing towards the 3000 companies, the 3000 best companies in that index. And here they only have 1179 companies in their index, so that's actually not great at all. They have a sampling type just like all the previous ones, and the performance in the past year is actually quite good. It's up 7.72%. For the past 3 years it is up 37.48%. That's actually not that great. But then the 5-year performance is once again really good, 73.63% up. You get 4 dividends per year, once again in the same months as most of the ETFs here in this video, and you get a dividend yield of 2.10%. And here you can see the dividend distributions of the past year. Then we can go to JRWU, and that's the JP Morgan All Country REI Equity Active UCITS ETF, and REI stands for Research Enhanced Index. So it's available since the 10th of December of 2024, so not a year old yet. You will see that in the performance. And the total expense ratio is 0.25%. You can buy one share on the SIX stock exchange for 27.91 US dollar, and the dividends are distributed in US dollar as well. There are 1048 holdings into this ETF, and there is 53 million invested towards this ETF. It's a fully replicated type, and here you can see the performance, and I put it between parentheses because it's year to date or yeah, how do you say it? It's the performance that yeah, it's the year-to-date performance that I wrote here. So it's not a complete year yet, and they are up 2.09% for the year. And it's not a good comparison compared to all the other ones, because you have the period in just before January that in January the performance of the stock market wasn't that good, and then in April with the tariff announcement of Trump it wasn't good either. So it's not a fair comparison, and that's why it's between parentheses. You get 4 dividends per year, and here finally you get it in different months. So it's in January, April, July, and October, and the dividend yield is not that high, 0.60%. But that's mainly because of this number, I think, because it was only around for 1 month, so this wasn't up to its full potential. When that would be when this is corrected in the beginning of 2026, I think it's going to be around 0.85% or 0.90% the dividend yield. And then we have the VanEck World Equal Weight Screened UCITS ETF, the TSWE, total expense ratio of 0.20% and Dutch based. So you have a share for 32.89 Swiss francs on the SIX stock exchange. And the dividend is paid out in euros. You can also buy it in the rest of Europe for euros as well. And then it's the ticker TSGB. There are 252 holdings into this ETF, so VanEck is really hammering down on the number of holdings because they are really screening for it. It used to be called the VanEck Sustainable World Equal Weight UCITS ETF, but they replaced sustainable by screened in the name and put it more to the back. So because they screen, of course, they cut away a lot of holdings. And VanEck, I really like the ETFs from VanEck. The only thing is, in Switzerland and in a lot of other countries, you need to pay an extra 15% withholding tax for the Netherlands. And of course you can ask for it back, but it's really, it's tedious. You have to put in a lot of time you have to put in time to ask for it back, and then you have to wait and wait and wait. So when you receive the dividend, it's taken away immediately, but then to get it back, it takes time. But if you have an ETF from VanEck, like this one or the TDIF that is coming back in one of the next videos, all the time ask for the withholding tax back. Don't hold back on it. Don't withhold on it. They don't do it either. So make work of it and ask for it back. This is the performance for the past year, 7.73% up. For the past 3 years, it is up 43.21%, and for the past 5 years, it is up 55.28%. They pay out 4 dividends per year, so quarterly, in the same months as 5 of the other ETFs in this video, and you have a dividend yield of 2.08%. And then here you can see that the distribution that VanEck does is also way more simple than all the other providers of ETFs. They just say, okay, now you receive 10 cents, then you receive 31 cents. So not 4, 5, 6 numbers behind the dot. No, it's just keeping it simple, rounding it up, rounding it down. They don't do all those bullshitty things. And you know that for every share you get 0.10 euros. It's easy. A lot of other ETFs should follow the lead, because it's really annoying when you see that with all those rounding errors that you miss out on a lot of money, and with VanEck at least you don't have that bullshit happening. So then you have the overview of all the ETFs that I discussed today in this video. And as you can see, I order them just according to the number of stocks that they have in their ETF. So it's not a true, how do you say it, order of the importance of the ETFs. For me, I always look at the total expense ratio, but in this case, you only have one dividend per year for the WEBG, so from Amundi. I wish they will change that. Probably they won't do it because their total expense ratio is relatively low, and every time when you distribute a dividend, it comes along with costs as well. So maybe they don't want to do it to keep their total expense ratio low as well. But so far, their 1 year performance is excellent. So if you don't mind that much of only receiving one dividend per year, WEBG is definitely an option for you. Then you have the Invesco one, the all world with a total expense ratio of 0.15% and paying out quarterly dividends. And also the 1 year performance isn't that bad either. You have the PSRW, it's a strange one from Invesco. I'm going to say that it's a strange one, but yeah, the 1 year performance and the 5 year performance is definitely up there. The 3 year performance is maybe not that great, but excuse me. The yeah, it's an interesting ETF, and that's to say the least. So do your homework. Look at what you like in those different ETFs. And if you say, no, I want to have as many stocks as possible, then the V3AL from Vanguard is definitely something for you. The 1 year performance is a little bit bad, but look at the 3 year performance. It's actually, from all the ones that we have results of, it's the second best performer. So you can't go wrong with any of these ETFs. Maybe the one from VanEck with only 252 stocks isn't that great for a one fund portfolio, but all the other 6 are definitely up there. So that's it for today. I want to thank you for watching to this one. Please consider subscribing to my YouTube channel. I want to give as much information as possible in all my videos, and I hope you like that. So if you like this kind of content, also hit that like button. Hit that notification bell as well, so that you get notified when the next video of this series is popping up. And with that being said, thank you for watching to this one, and see you on the next one on my YouTube channel. Bye!